Over to you, Paresh, sir.
Good evening and welcome everyone to another episode of In Conversation With. In Conversation With is a management series by CASI Global from New York, where we invite senior management professionals from across the world in search of executable advice. So today's session is part 3 of the blockchain. We have 3 and this is the third one. This promises to be a very interesting one because we have amazing speakers from across the world and we have amazing audiences as well. So as we progress, I'll make the introductions. We shall go over to the chief guest for the day, Latika Kundu, the CEO of Metropolitan Stock Exchange. But before that, I have a question. Anyone can answer it. Any one of the panelists can answer it. I would request a short answer so that we can get along with the seminar. The question is, we hear a lot about blockchain, every day, all the newspapers, all the e-magazines, and everybody is gung-ho about blockchain. Everybody wants to invest in blockchain. Is it really going to make a difference to corporates or the balance sheets or to the bottom line, or is it just a fad? Saying we used to make notes physical and then we used to use ERP systems, and now let's use something which only a few people understand. So how does it really happen? Anyone, please. Amrik, would you like to take that, please?
Yeah, but I would love you to repeat the end of the question.
So the question is blockchain another fad? Of shifting from ERP systems to one more system, or is it really helping corporates in the bottom line?
Well, the investment into little blockchain projects for now are really helping with the blockchain development globally. A lot of little teams of blockchain developers are really relying on all those token issuing and all those ways of getting funded to really expand the blockchain technology. So yeah, it is a great thing right now. Everyone is actually investing in it, and it does hold a great potential.
So you work in consulting at the Luxembourg blockchain consulting. When you pitch or when you're working on your projects, is there a focus on the bottom line? Or is it just that you say it's a better process to do?
What? Sorry, what do you mean? The bottom line.
When you enable a company to use blockchain technology, any of your projects, is it bottom line focused?
Bottom line focused. I'm sorry, it's just that one phrasing.
Does it help companies realize higher profits, or
Yes,
is it
of course.
just a change in the profits, or is it just a change in the process?
Well, it depends. For now, it was really about security and privacy. So it was about providing better services, more than actually improving processes to make it faster and improve profits. So our use of blockchain technology is about quality and the improvement of integrity of data, mostly.
Thank you for your opinion. We should go on to the chief guest for the day. Latika ji, thank you very much for being here. Please tell us your opinion on the topic, please.
Thank you, Paresh, and thank you, Madesh, for having me over. It's definitely a pleasure to be here, and it is something that is definitely the next big thing to happen. I know there were a couple of questions before we started the session, and I'll just go through my thoughts on blockchain and how I see the implementation of that into financial markets, specifically into the capital market space. This has been a space which is very close to my heart for the last 25 years. I have dedicated my career to building and setting up exchanges and, the other clearing as well as depository functions across India as well as global markets. It has been a very interesting journey seeing how different assets do have different functionality in terms of what they need to offer to the financial markets in terms of diversity and leverage. But the basic ethos of the financial markets, whether it is in any country, is the same. It is a three pillar strong, ethos, which talks about being fair, transparent, and equivalent. And this was something that resonated when I understood and went into deeper learning of blockchain with the MIT Sloan course, which gave me a more in-depth perspective. Even though in the previous exchange at Singapore, the Diamond Exchange, which was the world's first commodity spot exchange in diamonds, we did implement that on the depository side. It has been definitely something that I feel is for much more to be explored. The technology, I wouldn't say has reached its most optimal levels, but to be on the positive side, this is what I think is the next change to happen on the exchange spaces and the financial and capital market space specifically. Of course, it will happen across different industries, but I speak specifically for my industry that I've been here, and what exactly I feel I can see the future of this industry being. It's not in terms of just a change or a shift, it will be a complete transformation, just similar to what happened 25 years back when we moved from open outcry systems to electronic. And that's what got me caught into this whole love for this market as well as this industry. I see the next change is getting into blockchain. The reason why I feel so strongly about it, and this has been at least for the last over 2 years, since I've understood the technology a little more in depth, is because I feel the whole market structure is about to change. It's not just about changing, bottom lines or making it more profitable. It will help reach out to more people. Of course, we can see that the crypto, which has been easily identifiable by people as something they can relate to or something they can see an immediate profit on, blockchain, the technology behind it, is something you don't resonate immediately with. The common person is not going to resonate that, oh, what is it that it brings to the table? But it is, policymakers and people like us who actually sit down, understand these markets and say, what is exactly that it will deliver? What is it that it will bring to the market? How will it reduce intermediation? How will it help in having better price efficiencies? There is, of course, much more to be done, but the smart contracts or the immutable records, I mean, what is all technically known about the blockchain, will finally have to garner some more. We know one thing that's lacking from a capital market perspective for it to be launched into an exchange space is speed. That's one thing that's definitely missing. But what is it that it actually will bring to the table, I see within the next decade, is the market structure, which is today comprised of exchanges, clearing corporations, and depositories, itself will have a change. The whole reason why clearing corporations ever came into the financial and the capital market space was to take away the risk factor and to understand that what was the delivery, the payment, the default, and all other risks that got involved, because you did not, because of the change or the different cycles or the contract not being completely, solidified, and it is not, may not be permanent in the manner in which we understand it now. We know that blockchain provides those basic, very, very basic functionalities which we can identify with and say that it's quite likely that we will see. In fact, that's something that even I wrote in my paper at MIT, was that we will see something like a DEPEX, which is a depository exchange. I don't see a clearing corporation staying in the whole market structure anymore. So what I see is clearly an exchange which will have contracts, which will be clearly identified, which will get transacted across globally, depending on how the regulatory environment functions, but that's how it could happen. There would not be a requirement for a clearing function because of the risk taken away due to the technology. And there will just be a requirement for a depository, a warehouse, a depository receipt. So basically what you're doing is you're making the systems more efficient. You're getting the financial institutions into the technology a little more ingrained, because they are able to diversify their portfolio. Thereby, you are able to introduce more products, more commodities, Equity is one side of the market, but then commodities is a much larger side which has yet to come in. It isn't there in a big way globally, yes, but I believe that there's a bigger way in which it can come in. If we're talking about $1 trillion happening on an annual basis for each commodity, or multi-trillion dollars, we could be talking on much larger numbers, a few years later, once this technology is fully imbibed into the system. Of course, what is important is that there could be possibility of security issues. We have seen that and that can happen with any technology. It's not that technology is foolproof. It's then about making sure how you address your firewalls or how you address your systems to ensure that what you deliver out, it takes care of those. But at the very broad front, I see the next generation of exchanges looking very different structurally, not just for the bottom line or for the profitability of the market to go up, that it will, but we're looking at increasing the whole size of the market, into going multifold, because we really do not have a spot commodity exchange. That is the very much the need for the hour. We have OTC markets running spots, but we don't have exchanges running spots truly. Yes, now slowly we do hear that it will come in, but is it really coming in for only those products which still run in OTC, or it is also going to come for products which really get produced in a huge abundance on an annual basis, which get consumed, but they are not treated as investable assets. So for me, it's a slightly different dimension. It's not just about thinking very singularly about blockchain. It's about marrying the two capital markets along with the blockchain technology. That is very essential, and I think that is what we must focus as the more macro change that I look at. Of course, that will be meaning that we need to learn, we do learn. But so my basic statement as learn, unlearn, and relearn always comes in. And probably now soon will be the time to unlearn and relearn as to how do we present a new market structure, what are the new skill sets required, what is the adaptation and adaptation that is also required by the markets, regulators, and everyone, policymakers, as well as how do the market participants view it. Sometimes you get answers from market participants, and usually that's what we do when we do market research. But there are many times only when something is shown to them in a prototype that they realize that there was something missing. There was something missing, and this is what made the difference. It's like before electronic markets came in, open outcry was considered as the way markets function. But as soon as electronic markets came in the capital market space, we realized that, yes, there is something much better. And we can see that 25 years on, it has definitely created a much larger market. There is more understanding of the market. There's more transparency, it is more fair, it's more equitable. And so I go back to those three pillars to say that this is how I feel that the two, that's what got me thinking about blockchain, learning blockchain, and understanding that what is it that it could bring to the table for capital markets. These are my initial thoughts.
Thank you, Latika ji, for your thoughts. I can tell you something. This process that you spoke about, seamlessness by using blockchain in the markets, especially for commodities, is of very high interest to us, because currently we are the world's largest platform for sustainability, with a presence across 52 countries. And the next project that we are taking on is setting up an ESG exchange. We plan to use blockchain for the same, for the exchange overall. But in particular, we want to digitize, impact bonds. We are creating a large platform for trading impact bonds. And yes, I will reach out to you again offline for advice on it, because this is a big one for us. Increasing liquidity in the markets for impact bonds, so that I want my children to be able to invest $1 from their pocket money in an impact bond.
Right.
So that is the dream. So yes, we are strong supporters of blockchain when it comes to an exchange. So it was a pleasant surprise to hear your thoughts, on blockchain with relation to an exchange. It was absolutely a delight to hear that.
Thank you. Thank you.
So I understand that you are having a constraint of time and would not be sitting through the entire session for today. So if we have any questions for Latika ji, she would be happy to address, or we can move on with the presentation for the rest of the evening. Anybody,
Yeah.
any questions? Patrick?
Yeah, Paresh, I would like to ask a question to Latika. So Latika ji, thank you very much for this insightful session. I really echo Paresh here on the thoughts you have for capital market. So, do you think capital markets will be leveraging public blockchain, or because there is some sort of hesitance right now, capital markets using public blockchain. So, do you think that that's the way forward for capital markets using public blockchain? I mean, the concerns of privacy and all those stuff.
Yeah, so see, since there are different types of blockchains, you could have private, you could have permissioned, you could have consortium. So I think what I see happening is a multi-use of all these different blockchains because of the security measures, or just for control. So it possibly that if blockchain reaches that level of maturity, because we have to be realistic that what the technology also grows, correct, and it does improvise to
Right.
itself. So yes, we definitely need a further improvisation on the technology per se, and but as of today I don't see it happening as a first tranche. I would see more of the other types. It would be a combination. I would see it more like a consortium, some part of permissioned, some part could be private, and there could be a public space also. Because actually, if you go to see, exchanges function in a very similar fashion even today. So if you're saying, will I see only one asset class in a single exchange globally? I think that's too far-fetched and unrealistic even today, or probably even a couple of decades down the line. What we still will find, it's like there will not be a single government, or there will not be one single regulator. I've been hearing it for the last 1.5 decades at least. So of course, these are calls we understand that practically don't convert. But what can practically convert in that you would see multiple exchanges adopting. Now, how they adopt the technology could be different for each one of them. But I think the winners will be who adopt to the whole structure. They look at the change in the market structure, whereby they are able to allow one of the pieces, which is the clearing corporation piece, just let it down. But those will take a little longer to happen. The depositories are something more natural. Warehousing, depositories, any supply chain, anything that is more manageable at this point, and more not that online driven as a trading functionality. I see adaptation in those areas happening first, and eventually, yes, you will see, but you will see a whole market structure
I see.
change. So
Okay.
whoever has the bandwidth to actually do that and invest that kind of, because it obviously is, you need that kind of capital to invest in. I think that will be the next set of exchanges. That will be the future of exchanges.
Okay. Thank you. Thank you. And just a follow up on this one. So do you see any sort of traction happening in India? Because I know SEBI came out with a rule that, blockchain needs to be used for, record keeping or something. So how are Indian regulators or exchanges are responding to this change?
No, I'm sure this is a very, very welcome positive. It's a very forward looking change, and something that is been discussed and spoken of. In fact, in my first few meetings I was like, I said, actually, this is how I see the future of exchanges happen. So I'm very happy to see it convert, and come in as a formal proposal of having depositories incorporate blockchain. Now, how they do it and how they implement it, that is what has to be seen. Because how macro level you look at things and how futuristic you are able to see something convert. So that is something yet to be seen. But yes, I guess even if there's one or two dabbles and changes, that's okay. That as long as a step has been taken, it's a positive
I
step.
see. Okay, fantastic. Thank you so much. Okay.
Thank you.
Thank you, Latika ji, for that. Thank you very much. Let's proceed with the next speaker for the day. Amrik, over to you. We would love to hear your thoughts, please. Amrik.
However, I cannot share my screen, so I cannot show the PowerPoint.
Yeah, I've just given you the rights. You'll be able to share your screen now.
Okay, thank you. One second. Over there. So, what I wanted to present to you today was how privacy is achieved in a compliant manner in the context of cryptocurrencies. So, on the 10th of January 2020, the 5th AMLD, the European Anti-Money Laundering Directive, came into application. Under this update, the crypto asset sector was now considered an obligated entity, subject to AML and rules and legislation. Crypto companies were now required to carry out money laundering risk assessment, document AML policies, undergo AML training, and most notably adopt the QYC procedure, know your customer. Pressure started to build up on the firms to comply with the example of Binance, the most popular exchange on the market, which a few months ago, in June 2021, was banned from undertaking any regulated activity in the UK, failing to meet the FCA requirements. Fortunately, they were cleared in August after hiring a spree of high-profile compliance officers. However, after the delisting of Monero from a few major exchanges, it became evident that one product was becoming undesirable in this newly regulated market, the private coins. To understand what a private coin is, we must first draw a basic distinction between anonymity and privacy in the context of financial transaction. What we call an anonymous transaction is a transaction where no one knows who you are. We will call a transaction private if what you purchase and for what amount is unknown. Bitcoin is anonymous, but not private. Identities are nowhere recorded on the Bitcoin protocol itself, but every transaction that is performed is visible on its blockchain. This presents an advantage towards AML regulation compliance, AML standing for anti-money laundering, as any coin can then be traced back to its initial issue. Many companies have started to appear in the likes of Chain Analysis, CipherTrace, or Elliptic that provide tools to visualize and track Bitcoin transactions for compliance purposes. The downside for Bitcoin, however, is that it is not fungible anymore. There are dirty Bitcoins and clean Bitcoins. And if the one you receive was linked to illegal activities in the past, you won't be able to trade it on regulated exchanges. At first glance, blockchain protocols that offer privacy might seem to exist only to support criminals and criminal activities. And therefore, it seems only logical that they get listed from the major exchanges. But by considering closely their applications for businesses and individuals, the utility of privacy becomes more evident. At the scales of individuals, many reasons which push one to adopt private coins for certain transactions. As an example, we'll consider this alternative. An individual with a chronic medical condition wants to purchase his pills online anonymously, or a couple would like to make some taboo purchases. But also a lot of companies want to protect their trade secrets and supply chain information from competitors and are at risk of losing their competitive edge by accepting certain crypto payments. So how is privacy implemented on the blockchain? Privacy can be achieved in many different ways in the context of cryptocurrencies. But ultimately, the key is to allow transactions to be posted on the network without revealing information on the sender, the recipient, and the amount. Monero is the most popular private coin today, and uses 3 different unique cryptographic techniques to achieve total privacy. The sender of a transaction is identified with the signature he uses to issue it. Therefore, in order to protect its identity, Monero makes use of ring signatures. The signature of the sender gets mixed with all the decoy signatures retrieved from the Monero blockchain. It becomes then impossible for an external observer to determine who really signed the transaction. The recipient of that transaction receives the payment on a newly created address that is not publicly linked to him, which we call a stealth address. It will be like creating a new anonymous bank account for every time you receive a payment. Finally, the amount of the transaction is masked with a technique called a ring confidential transaction, where the information is encrypted for only the recipient to see, and then placed in a commitment in order to verify that the inputs match the output. In this way, Monero achieves total privacy. We have also the example of Dash. Dash is not a cryptocurrency that is private at its core, but does have a privacy optional feature. Dash implements the famous coin mixing technique, CoinJoin, into its protocol and offers it as an option for private send. A user of Dash wishes to make a private transaction to its sister, for example, would do so by expressing the amount he wants to send to a master node, a special type of node on the network. The node would then search for two other people who wish to send the same amount of money and mix the recipient address of the transactions. The user ends up sending funds to someone else than his sister, but she still receives the same amount from another party, thus breaking the link between the sender and the recipient of the transaction. However, this technique still gives away a lot of information on the transaction, and its security is dependent on the number of participants. The less people use the privacy feature, the less secure it becomes. Finally, I would like to introduce the Zcash technology that uses the concept of zero-knowledge proof to achieve privacy on its protocol. A zero-knowledge proof is simply the ability to prove that you hold on an information without revealing it. The challenge here is to tell whether a transaction is valid or not, without knowing the sender, the amount, or the recipient, because transactions will be stored on the blockchain fully encrypted. As a good example of it will be like proving that two balls are of different colors to a colorblind person. By letting the colorblind person hold both balls behind his back and then switch them or not, you'll be convinced that you can distinguish them if you are able to tell if you switch them or not once he shows them to you. Now, in order to fit compliance requirements, private coins must enable the separation of spending and viewing permissions of transactions, which is what was implemented by Monero and Zcash in the form of viewing keys. The keys will be formed using the original spending key and will allow access to view every incoming transactions to that address. Would then be shared with auditors so that we would be able to verify the balance of those addresses and review past transaction activity, but also to an exchange that may need to conduct due diligence checks on the customer. In the case of Dash and coin mixing, even though private sense increases the privacy of its users, it does not encrypt information, therefore doesn't need to be decrypted by any type of key at all. On top of it, successful investigation of the ledger can still be performed with analytics techniques, as I said, with chain analysis, elliptic, etc. So in conclusion, what we have seen is that there's no one way of achieving privacy with blockchain, but in order to comply with regulations and provide information to auditors, the most notable private coins allow deciphering options and are not yet doomed to disappear in this newly regulated market. Thank you.
Thank you very much for that, Amrik. Do we have any questions? We can open for the questions now. Patrick, you want to take that?
No questions. I mean, it was interesting. It opens a lot of more concerns, but nothing sort of specific about it at this time. Probably have questions in an hour.
Correct. Actually, I have a lot of questions on the concerns, but let's keep it at the end. Do we have Navabaro, Dr. Mitesh?
Yeah, he's joined in. Navabaro has joined us. I believe he again has dropped out. His network is a bit low.
Yeah.
So,
yeah. In the meantime, Amrik, I'm very keen to know about your company, your setup at Luxembourg. What are the kind of projects that you guys undertake?
So a few NFTs, and right now what I'm working on is accounting, triple entry accounting, having another entry, what we could say, that will be the blockchain, and record it, use it as the immutable record.
Okay.
But I hope it was the presentation was not too technical though. I wondered if you guys would understand if I went too deep into the technical aspects of it, or if you wanted a bit more business focus.
No, it was not technical. Just that we have been studying blockchain for quite some time now, and we have so many queries and difference of opinion between me and Patrick that there are so many angles that we do not do not understand or do not agree with. So basic problem with a cryptocurrency, starting right from the valuation to issuing, to the value that you bring to the table. So our problem starts at the value, and then it ends up with KYC and so many things. So we are right now in the absorbing mode. We are trying to absorb as much knowledge as possible. If I'm sure Patrick agrees to that.
Yeah, I mean, it's. I mean, listening to this privacy thing is kind of the big question is what is the objective there? I mean, it kind of is it because the information that you want to keep private? But I mean, it seems more like an opening door to somebody who's doing
criminal
something
activities.
criminal.
Exactly.
Criminal. Yeah.
That's the first thing that comes to mind, obviously. But when we consider closely, there's a lot of individual cases where we will want some privacy, and usually what private, except Monero, private currencies would do is offer the ability to do private transactions as an option and still keep it as a public ledger, so it would fit easily with compliance rules. But the idea also of privacy here is also to really allow fungibility, because right now with Bitcoin, except if it goes through the hands of the government and then goes back as a clean coin, when a coin has been used for illegal activities, it is tainted almost forever. You go through the entire blockchain and you can tell that 500 transactions ago it was used illegally, and it is therefore not able to be exchanged. And
I mean, that's something new for me. I mean, something that can be tainted that way. I mean, that sounds like a huge risk added to the long list of other risks that I already had there. Sort of, if you're buying a Bitcoin for the first time, you have you don't know that. I mean,
well, if you're buying through Binance, then that there won't be any problem. But if you're buying
right?
over the counter from someone, yes, you don't. Yeah. You will have to do yourself the chain analysis pretty much, because otherwise you could realize at some point that yes, it was a tainted coin and could not be used anymore, and then you could have problems.
Yeah, it's basically due diligence on buying a cryptocurrency.
Yeah. So yeah, it adds up another problem. So the one of the advantage of those currencies, Monero, was that then it would stay fungible. The coin will have no history, could be exchanged with any other.
Yeah, but the argument of decentralization is something that a lot of people talked about in the beginning, right? And I think that was also, I mean, if it's really truly decentralized, it has to be simple enough for anyone to do, right? And I think that's kind of becoming more and more clear that that's ideal of decentralization is impossible. You actually do need someone who has the capacity to check on, and as you say, the history of a Bitcoin as it becomes longer and longer, to be able to go through all the transactions that have happened, that requirement is only going to go one way, right?
Yeah, and Well, this idea of decentralization is really put to the test, especially with the governance of most of those cryptocurrencies, because even those who claim to have on-chain governance, who would be, well, the users governing the protocol itself, most of them, it's only a few teams of developers who could do the updates, who could change the rules, basically. And so, yeah, it is a real contradiction between the pursuit, the ideal, and the implementation.
Let me come back to you, Emric, with a couple of questions. Once we have Nawa Baro's presentation. Welcome to the show, Nawa. That will give us time for reaching out again to Emric. Nawa, thank you very much for being here.
Thank you, thank you. How are you doing?
Oh, we are doing very well, sir. Nice of you to join us. So your presentation is on your own personal consulting behalf, or the government association, the government blockchain association?
No,
Which hat
complete.
will you be wearing today?
Yeah, I don't have the presentation, but I have got some points. I will briefly speak on those points.
Please.
And I'm speaking on my personal capacity. See, a couple of points, like it's a generic thing that I would like to speak about blockchain, not so much into technical details, because we are an organization that we broadly work with in terms of promoting blockchain technology to be used in various departments in government and non-government sectors. So, key characteristics of blockchain are, as we know, it's decentralization, transparency, immutability, and automation. So it can contribute to enterprises, institutions, and government. So couple of sectors or key areas wherein it can help a lot is in, for example, identity, digital identity management. So blockchain-based solutions can help to reduce identity thefts and frauds through the effective use of cryptography and distributed ledger technologies. It can also help to build a platform for universal identity mechanism and thereby reducing the cost of maintaining multiple identity records. As per the recent data, at least one person in three in India, they store their personal details like financial, debit card, credit card, Aadhaar card in their mobile number, in their mobile, email or laptop. It presents a huge security risk. The traditional password authentication process can be replaced with more faster multi-factor authentication process and biometrics. Another sector wherein blockchain can be used in a more effective way is healthcare sector. So here in blockchain can help to enable more efficient medical data records management and supply chain tracking. This can enhance patient care, medical discoveries, and authenticity of drugs being supplied globally. Another sector wherein blockchain can be used is media and entertainment sector. As you know, global media and entertainment industry loses around $71 billion globally due to piracy, fraud, and theft of intellectual property. The effective use of blockchain technology can help to track the entire life cycle of the content, protect the digital content, and facilitate the distribution of the digital collectibles. Sports is another sector wherein blockchain can do tremendous role. Is herein they can Blockchain can help to streamline the existing sports resources, provide new avenues, and enhance the fan engagement with enhanced loyalty programs and incentives. Retail is another area where blockchain can play a major role. Is it can help to improve the data management tools, enhance supply chain operations, and thereby reducing the risk of counterfeit products in the gray market. The current global supply chain platform needs much more improvement. It's inefficient, poorly tracked, and sometimes exploitative. It can help to enhance effective tracking of assets, products, and services from the sourcing up to the consumption. So another in the government sector, I would like to mention very many state governments are active in blockchain in India. For example, Maharashtra, Tamil Nadu, Telangana, even in Northeast Assam, they are very much keen to adopt blockchain technology or try new technological platforms in various departments to bring more transparency and accountability in their departments.
So, in your personal opinion, what are the top places for, let's say, in Assam to start working on in blockchain? Where do you think the government would start or should start? What is an easy fruit? Where do you think it will start?
Some of the departments wherein it can be initially applied, wherein it can be more effective, are like healthcare, revenue collection, land records, land records and revenue collection, healthcare. Those are two departments specifically. It can be applied more effectively because whatever funding the government gives, so that it can reach to the grassroots level. This platform, blockchain technology platform, can bring more transparency into the system so that it reaches the last person in the corner. So it's a very new thing still in Northeast India, but there are some states which are showing keen interest into that. Like in addition to Northeast, the states like Tamil Nadu, they have already launched the blockchain policy. Tamil Nadu has already launched the blockchain policy last year. It is the first state in India who has launched a policy for blockchain, for AI. So, there are other governments like Telangana has adopted a particular district wherein they want to apply blockchain technology. Telangana state has adopted a particular district there. Similarly, Maharashtra is active. They are very keen in using it in public distribution departments. Like for example, sending the benefits to farmers and various other in healthcare sector, various sectors. They are also in the process of adopting blockchain technology. So more and more state governments are showing keen interest into it, and they have gradually started understanding the importance of it. In private sector, as we know, like in banking and all other sectors, they are using. I'm just speaking from the governance point of view, so that it can bring more transparency into the in the departments of various departments of the government, so that it can help all the public, and it should be transparent so that everyone gets to know like wherein the fault is, wherein more correction is required. So it can be more beneficial for departments in government.
Oh, thank you very much for your thoughts, Nawaji, because I completely agree with you. I'm a big, I really believe in using blockchain for governance. So in public distribution systems or land
Revenue collection.
revenue collections, land, and medical
Healthcare. Yeah.
and medical. So
Yeah.
these are three government uses which will be big. But
Yeah.
I was not aware of so many governments already using them. I was aware of Tamil Nadu.
Yeah.
We had a speaker from Tamil Nadu last week
Okay. Great.
from the government side who informed us about things happening. But I'm
Okay.
sure the governments in Northeast would do a great job.
Yeah.
I'm sure about that. So we can open up for questions, please.
Paresh, Paresh, I had one question,
Please.
and anybody can pick it up. I mean, I'm not an expert on blockchain and cryptos, so wanted to understand. So I agree that the world is moving towards the new technology. A lot of thing is happening about governance around it, but I've also seen a lot of cases where cyber attacks. So now times have gone where terrorists are going to use any physical weapon they may, but still chances of cyber attacks and biomedical weapons are or viruses are going to be something which we have to be very aware of. So all these people ask for the ransom money in bitcoins or other equivalent cryptos, right? So is there a mechanism where on one side we are propagating blind of so privacy versus kind of not knowing who is behind the door, but then why all these people are talking about the ransom money in cryptos only? So is there any answer to how governance can keep a kind of track of this AML or KYC or all that related stuff? If somebody can help me understand, please. Thank you.
That is an amazing question. That is, it could not have been better than this. I'm sure Amrik would be the right person
I
for
would.
us to point towards. If Bitcoin is so safe and you keep a ledger and you are able to trace 50 transactions, what happened 50 transactions ago, why are all the terrorists and scammers asking for money in
They're
Bitcoin?
not. They're not using Bitcoin anymore. That's the point. So
Oh, one of the cryptos,
first,
not
yeah.
Bitcoin.
So at first they were using Western Unions. So you had the classical scam on Western Union. Then they started to move on Bitcoin. The they some of them are still using Bitcoin because it's very easy to still exchange it for fiat currencies. But now they are more using what I presented to you, Monero, private currencies. And so if they were to use Bitcoin and try to anonymize them, yes, for big um, for big losses when there have been like big attacks, a lot of money in Bitcoins that were recovered with ransomware. Um, when the FBI gets involved, it's pretty easy for them to recover the Bitcoin. So the Bitcoin protocol is secure and is transparent. So someone that is gaining Bitcoin illegally, it will be on the blockchain. They will try to make it seems like they will hide it somewhere. They will cut the transaction in many pieces, send it to a lot of different addresses, trying to how you say that, hide the trails, you know. But ultimately, with a great, if there's a real investigation on it, that's what I was saying in the presentation. As long as you decide there's going to be an investigation, you can recover, you can follow the trail and get to them all.
See, but the problem would be the jurisdiction, right? So, for example, if a crime is committed in India or say South Africa or US, and the person who is asking for that ransom money is sitting in Cuba or God knows which country where there is no control of any other government to capture that person, then that person can enjoy it. So again, see why I'm asking is that the
Well,
entire anti-money
but
laundering and the KYC can be caught if that person is in the same jurisdiction, right? Now, if somebody is sitting in a completely different jurisdiction can do anything and everything, sitting at one place, that person can rule the world, can control any activity. So how governments are going to accept, because see, it's an amazing technology and no two thoughts about it, but
Well, all the people are still have to accept those bitcoins. Now those bitcoins are tinted. This person is holding a lot of bitcoins, but still, anyone who is doing their due diligence, we found out those bitcoins are not uh, clean. And if ever they want, for a lot of people, it's still the case. They want to convert it to fiat currency. They want to go through Binance. They want to go through a lot of crypto exchanges. They won't be able to come into those crypto exchanges with those bitcoins. So they don't want to trade with those bitcoins.
Okay.
So you hold in on dirty bitcoins. Everyone can see it. It's public. So now if you're a criminal, what you're going to try to do is, as I said, you're going to split, you're going to set it to a bunch of addresses, you're going to put it on mixers. But if you put it on a mixer and your Bitcoin has no history, it is still not compliant. You need to explain where those funds come from.
Okay.
So
Thank you.
Samir bhai, I'll give you my thoughts on the same. Now, what happens is when you're talking about money running through a banking system, let's call it an exchange. So we'll talk about stocks or commodities or money. Let's refer it to an like an exchange for this conversation. Yeah. So there is an RBI which is an exchange. There is an Bombay Stock Exchange which is an exchange, and there is an MCX which is a commodity exchange. So anything that passes through that can be put under pressure because all exchanges are controlled and owned by the government. Yeah. So even if it is a Cuba government or a Venezuelan government, you can through United Nations or through other bodies reach out to that government and put force on them to freeze a certain asset class or freeze a certain account number in a currency or cash or a commodity through the government. And it has to be done because today governments are working together. But when it comes to Bitcoin, the exchanges are private. So even if you put pressure on X, let me not take a name, but even if you put pressure on a government, the government can always say, okay, we don't own the exchange. It's a private exchange because it's a Bitcoin exchange. So then it suddenly becomes funny money. So it is not that there is good Bitcoin and bad Bitcoin. Any Bitcoin can become a bad Bitcoin if you are not able to control or freeze or seize even through the government support. And that is the core problem that I have with Bitcoin or any other such cryptocurrency, where you will not be able to, when you finally understand that okay, this money has come to this account through some misuse, you will not be able to put pressure because the exchanges are private and the money can be routed in a split second to so many accounts. Which account will you freeze? So you have no idea because it is not through a government regulated exchange. And that is why even the Indian government is today working, or there are a few other governments which are working on private cryptocurrencies or government backed cryptocurrency. So they are saying if you wish to use crypto, we will give you the crypto so that at least we can freeze the account. So that is the core problem which I also have at some level with cryptocurrencies. Be it a Bitcoin or any kind of money. If you're not able to finally freeze it or seize it at some level, then it is outside the purview of any government. So then that is really the reason, because
that's
this is the question
core
which
difference
yeah,
between
sorry.
digital cash. That's the core difference between digital cash and Bitcoin.
No, that is not the core difference between digital cash and normal cash. A digital cash
No, and
can be
Bitcoin,
owned by the
digital
government.
cash and Bitcoin, digital cash and Bitcoin.
No,
The
that is
only
still not.
validate.
If the Indian government tomorrow starts India Bitcoin issued by the Reserve Bank of India, or the Chinese government starts Chinese Bitcoin issued by the government of China, then they will be able to control and freeze the account in which the asset lies. Yeah, but if the exchange
In
is
Bitcoin,
private,
this will be implementable. In Bitcoin, this will kind of be implementable. If you want to freeze an account on Bitcoin, you have to put pressure on all the miners so that they don't process the transaction from that address. What we call account is an address. So whenever that address signs transaction. If no miner decides to process it,
No, so
that
you have
account
to
is
put pressure
freeze
on whom? Who do we have to put pressure on?
on the miners, the one that validates
Correct.
the
But
transaction.
the miners may not talk to me. The miners may be in a rogue
Yeah,
country.
so in digital cash, the miners is just one government. That's what I said. It's the problem.
Correct. So, the miners are not governed by law. You cannot really go after
No.
a miner in a.
So if you if theoretically you wanted to do this regulated Bitcoin where you could freeze accounts, you would need to have kind of a permission, a license to be a miner, for example, that would be controlled by the government. So the government could put pressure on the miners and have kind of only a certain list of miners that would be accepted to run the network. If just as an exploration of your idea, if that is the core problem, there's possible theoretical solutions to that.
Yes, so that is the core problem, because if an account cannot be controlled, till that time, I'm sure Samir bhai, money will be asked by everybody in crypto.
Correct.
Because there is no government pressure which you can put or freeze.
Correct. Sure. Thank you.
But once you can start freezing, then there is no difference between a rupee or a dollar or a crypto.
That was the core difference. The decentralization, I mean, the dependence on the miners compared to this one central government who can decide whether to freeze the accounts or not.
Correct, absolutely.
Digital cash is still a great solution, actually.
Yeah, digital cash is a great solution. I completely agree to that. But that was an amazing question, and that was really food for thought. So I can see Patrick smiling, now smiling. Almost everybody is smiling on that. So thank you for that, Samir bhai.
That's the concern. That's why government is planning to bring out a policy on that. That's the concern of in India. That's the concern of Reserve Bank of India. How do you regulate? Samir's point is very significant, because that's the only major concern of government, even RBI. That's why there is a discussion. There is news is coming out that RBI is planning to bring out a policy they are going to regulate. There is a discussion going on there.
So Samir bhai is totally on track. So that was nice of you, Samir bhai. Thank you very much, Amrik, for being a good sport. Thank you very much for that. If we have no more questions, we can call it a day.
My pleasure.
Perfect. So thank you very much. My name is Paresh, and I am a member of the board of directors at CASI. We are the world's largest platform for sustainability, and this is what we enjoy doing. We do a lot of things, consulting, education, and all. But this is what I personally enjoy doing, sitting with senior people from across the world in search of executable advice. Thank you all very much for being here. Thank you all very much. Thank you.
Thank you.
A pleasure.
Bye-bye.